MP Materials just posted another phenomenal earnings report. The company crushed the expectations for both earnings and revenue. In this video, I'm going to be looking at free cash flow, valuation, risks, and how sustainable the growth is for MP Materials. Let's see if this Captain America of mining is a buy. Before we start, please remember this is not financial advice, it is only for educational purposes and you should always do your own due diligence. Also, I've recently done a full in-depth stock review for MP Materials and I will post that link in the description. We're gonna start with the financials. MP Materials had multiple quarters where it crushed both the revenue and earnings estimates. In the first quarter of 2022, MP Materials had a net margin of more than 50% while also growing its top revenue at more than 170% year over year. As you can see in this photo, the company managed to grow significantly while also improving its margins, and it has a gross margin at around 86% with a net margin around 51%. Next up, we're going to be looking at free cash flow, which is defined as cash from operations minus capex. In terms of free cash flow, MP Materials had its best quarter ever. After growing its cash from operations with more than 280% quarter over quarter, with cash flow from operations sitting around 121 million. Moreover, following a capex spending of only 50 million for the first quarter of 2022, the free cash flow was around 70 million. As you can see in this photo, another important aspect is the free cash flow conversion rate as compared to revenue. This metric was around 43% in the first quarter of 2021, and this is a phenomenal rate which proves MP Materials' ability to transform the better part of its revenue to free cash flow. Regarding the balance sheet, since the company has a cash position of more than $1.3 billion, I think the long-term debt that it has acquired recently is not a threat, but I do want to point out the low spending on stock-based compensation, and as you can see, the stock-based compensation expense has been consistently below 10% of the revenue. This is an encouraging trend for the company, and I do want to see a small amount of stock-based compensation going forward. Next up, we're going to be looking at the KPIs as we try to understand what's the root cause for the phenomenal growth that MP Materials has experienced. The gross margin per metric ton of rare oxide was around 88%. This is an absolutely phenomenal trend and it has only gotten better during the last 2 years. So why is the gross profit per metric ton sold so high? The gross profit is a function of only two variables. On the one hand, we have the production cost, which has been consistent around the $1,600 per metric ton, and on the other hand, we have the average revenue obtained by MP Materials from selling this rare oxide. As you can see in this photo, the average selling price grew from around $5,000 in the beginning of 2021 to around $14,000 in the first quarter of 2022. This translates into a growth of more than 130% year over year. This showcases an increase in the demand for NdPr, but how sustainable is this price on the long run? Like most other parabolic price increases, I do expect that the price of NdPr will be mean reverting. This will probably happen somewhere in the next quarters. However, let's look at how MP Materials management predicted the price for NdPr when they first got listed, which was at the beginning of 2020. As you can see in this photo, MP Materials management expected a price of around $65 for 2022, as other industry experts expected a price of $89 per metric ton with a price increase of over $100 in 2023. However, the current price for NdPr is around $130 per metric ton, as we can see in this photo. To conclude, I do expect that the price of NdPr will slightly decrease in the next quarters. However, as long as the company will manage to keep its cost of production low, I believe that the margins will remain good with only a slight decrease. Next up, we're going to be looking at the valuation. Even if the company has now a high level of earnings and free cash flow, it has made it clear at the end of 2021 that MP Materials will most likely invest around 700 million in capex over the next 2 years, with around 500 million being invested in 2022. As a result, I believe that MP Materials is better valued using the EBITDA or earnings multiples. As we can see, MP Materials right now trades around 12 times next 12 months enterprise value divided by EBITDA and 27 times next 12 months normalized price to earnings. Moreover, we can see that the company became cheaper in the last couple of months. However, for the sector where MP Materials activates, Seeking Alpha has a next 12 months price to earnings of around 12.5. Still, giving MP Materials' unique position in the US market, its low competition, and the increased demand for its NdPr rare oxide, I do believe that MP Materials deserves to be trading at a premium. Moreover, management has proved its ability to consistently invest its earnings and have a high return on capital. As a consequence, I do believe that the company will continue to execute well. Next up, we have the risks, and I'm going to highlight two significant risks for the company. First of all, we have a sudden decrease in the price for NdPr. This is the rare oxide that MP Materials sells the most, and most of its revenue is tied to that price action. A good way for MP Material to minimize this risk is to keep its cost of production low. As long as the cost of production for NdPr doesn't decrease significantly, I believe that there is room for a slight decrease in the margins. However, please be aware of the scenario where the price for NdPr will drop severely and things might start to unravel fast for MP Materials. The second risk that the company has is its investment in the assets that it currently does. It has budgeted around 700 million for 2022 and 2023, and I think that a major cause of concern would be stepping out of those lines and finding out that the investments they've initially projected are much more expensive. Next up, looking at technical analysis, as we can see in this photo, there are two strong areas of support. First of all, we have the trend line from where it recently bounced several times and the $30 area. Even if the company seems rightly valued because of the market volatility, I think it can still go back to $30. So if you want to open a position, what you can do is open a very small position in case you get FOMO. So open a very small position on the green trend line and leave some room in order to add more on the $30 support. To conclude, I do like MP Materials. I think that the company is a buy and I like how they've executed so far. The company is uniquely positioned in the US industry and it seems almost forced to succeed. But as we've recently seen with the market volatility, a great execution doesn't always translate into the stock price, so please be aware of the degree of high volatility before investing. Alright, that was it from me. If you feel like you've learned anything of value today or you want to see some more in-depth stock reviews or earnings reviews, please consider subscribing. Until next time, keep crushing it.